that was a really important thing to happen for the gold and silver mining space when silver kind of joined the gold party. So gold has basically been ripping, right? 2,000 to 44,000, doubling. Now silver, when silver joined the party, so I see this company, if silver prices get to 125, which is my expectation, I'm a speculator. I'm speculating. I don't care about $75 silver. I don't care about $50 silver. That's not where I'm looking. That's not where my projections are. My projections are 100, 125, 150.
Durrett highlights a significant shift unfolding in the precious metals sector as silver finally aligns with gold's explosive momentum. Gold has already surged from the $2,000 zone into the mid-$4,000s, establishing a clear leadership trend that has driven capital back into the entire metals complex. But the real inflection point came when silver followed suit, signaling that the broader mining space is entering a more aggressive phase of the bull market. For Durrett, this isn't about $50 or even $75 levels. His focus is on the higher structural targets where real speculative acceleration occurs. With tightening supply, record investment flows, and a long-delayed catch-up move underway, he sees $100, $125, and even $150 silver as realistic waypoints rather than distant fantasies. As silver joins the gold party, the upside for quality miners becomes dramatically asymmetric. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
Gold, this is really a absolutely fascinating setup, so we should explain it because it's historical, it's epic. When silver finally broke out above 2,000, it kind of never looked back. It did not retest 2,000, which is unusual, because that was a kind of a significant level. It just kind of went through it and just kept going. Then it went through 3,000 and it didn't retest 3,000 and just went through it again and just kept going. And so gold it's been on a rampage since it got through 2,000. I mean, 2,000, 3,000, and went all the way to 4,350. And now we're at 41.66. We're starting to retrace. We went down 12%. We're starting to retrace back. But gold has been this absolute monster. And when it broke out above 2,000, I was like, you just had this feeling it wasn't gonna look back. And it didn't. It just kept going. It became kind of the go-to trade for kind of the smart money. It's like it became the buy the dip asset, in my opinion, and it still is to this day. So silver, and we won't go into. I want to go into the macro reasons of why it's going higher and higher and higher. I'll just throw two factors there: is the U.S. bond market and the Ukraine war. Those were kind of the triggers for gold to just take off and not look back. And those are still in play here. But I wanted to go back more to the trigger of what's going to push it higher and higher. So we got through silver. When silver joined the party in August of this year, when silver got above 40, it didn't take long for silver to go from 40 to 50. I mean, it was like, and I didn't think it would. 40 was a really important level. Got above 40, and now we ripped all the way to 54.50, and today we're at 53. And so that was a really important thing to happen for the gold and silver mining space when silver kind of joined the gold party. So gold has basically been ripping, right? 2,000 to 44,000, doubling. Now silver, when silver joined the party, because most of your gold miners also mine silver. So it's important for their balance sheet, their revenue, their margins for their silver production to also, because there's not that many, it's very rare for anybody to be a pure silver miner. So silver miners mine gold, gold miners mine silver. So it's important that silver joined the party for that space. And when silver joined the party at $40, I saw a huge leap on my website. Absolutely huge. I mean, everybody basically came running in, but this is the early crowd, the retail crowd. This isn't Wall Street. Yeah. This isn't Wall Street at all. This is the retail crowd recognizing opportunity. And so you had a lot, and so that's when the HUI broke out. So in August, you had a breakout. The HUI is a gold miner index. You can't buy the HUI. It's just an index of the large gold cap. But that's what I've been using because it was around when I started in 2004. The HUI was around, so I've been using it for 20 years. And so the HUI, it basically it took off with silver. So you had a breakout. However, That breakout went from August till the middle of October. And then middle of October, we had a correction, a severe correction. Gold went down 12%. Silver went down 18. The HUI went down 22. That was correction number one. And we'll get to correction number two, which is coming. And so now we get to, what is the, so we're up and running, but believe it or not, a lot of people, a lot of gold and silver miners right now are on the sideline. The reason why they're on the sidelines is because they had this big rip, went all the way to 43, and they basically got off the train. They took their profits, and they're waiting to get back in. And so you don't have a lot of sentiment, strong sentiment right now. A lot of people are like, because they know what I'm about to tell you. What I'm about to tell you is that even though we broke out in August and we had that correction, that's not the last correction because the S&P 500 is so important. So the S&P 500 near an all-time high. Today it's at 6,800 and the all-time high is 6,900. So it's basically knocking on the door of an all-time high. And so the S&P is at all-time high. You got $64 trillion in the stock market. That money's not in miners. And so, but when that S&P rolls over, and I think it's going to crash, I think it's going to go down 40% is my expectation over the next 6-9 months. When the S&P crashes, that money, I believe, will rotate into the miners. So we'll have this initial correction in the S&P and in gold and silver and the miners. And the question is how deep. So the last one was 12% in gold. I think this one, it depends where it starts from, but I think this one's going to be another deep one, 10 to 15%. So we're going to get another, just like we had in October, but it could be more severe than last time. Could be. And so, in other words, basically be ready for that big, deep correction that's coming. I think it's inevitable. But I don't think gold can lead here. I think the S&P, like I said, it's near an all-time high. So is gold. Gold's about $200. It's at 41.50. It needs to go to 43.50. So it's about 200 from all-time high. I do not think gold will get an all-time high before this next correction. But it might get to 42.50, maybe. Get above 4,200 next week's a good possibility. It might get them, but my feeling is that gold and silver are not going to take off and lead here when we're getting ready to, the stock S&P is ready to crash. I do not believe we're in a melt-up phase where the economy can support every 1 million. I don't know why silver mining companies can't figure this out. Nobody wants to think into the future. Every 1 million ounces of production is worth approximately $500 million. Now, how? It's really simple math. You take 1 million ounces times $100 of silver minus $50 for all-in cost. It gives you $50 million free cash flow. Now, that's a conservative number in two ways. First of all, I think the cost will be below 50. And two, I think the silver price will be above 100. So I think that $500 million is actually conservative. So I'm only going to give them credit for 2 million ounces of production for this mine. That's $1 billion. So they paid 50 million and they're getting $1 billion back. Conservatively, they could be getting $2 billion back.
Yeah.
All right. So now I have a tool that I used to value companies. So I threw it in there, 6 million ounces at $125 silver, which is my expectation, and $50 cost, and it pops out a 25 bagger. That's the kind of leverage Guanajuato has. Now, they're probably going to bite us. I've added some dilution in there too for that 25 bagger. But they're probably going to bite us a little bit more on dilution if they can't borrow the money. If they can borrow the money, we're in great shape because they're going to need some money to pay this deal off. If they can get a loan, they get a 10-year loan, that'd be fantastic as long as it's not convertible. But if they can borrow money, maybe they can, maybe they can't. Probably can't. If they dilute us, then we probably won't get our 25 bagger. But guess what? We're probably going to get a 15 bagger. So I see this company. If silver prices get to 125, which is my expectation, I'm a speculator. I'm speculating. I don't care about $75 silver. I don't care about $50 silver. That's not where I'm looking. That's not where I'm, my projections are. My projections are 100, 125, 150. So if we hit my numbers at 125, I'm expecting a 15 bagger. Can't beat that with a stick.
The current setup in gold and silver has evolved into one of the most powerful moves the sector has seen in decades. Gold blasted through the $2,000 and $3,000 levels without ever looking back, accelerating straight toward the mid-$4,000s before the recent retracement. Silver followed with equal force, rising from $40 to the mid-$50s in a matter of weeks, transforming sentiment across the entire mining space. As the metals surged, retail investors returned aggressively, pushing major indices like the HUI into breakout mode before a deep correction hit in October. According to Durrett, another pullback is still ahead, tied directly to a looming rollover in the S&P 500. When that rotation begins, he believes capital will flood into miners, especially those leveraged to silver's path toward $100, $125, and beyond. Let's get into the interview.
I go further than this. I want to say that buying gold and silver mining stocks is not investing. These are not Microsoft's, or 3M. These are not normal companies. Mining is a very highly volatile thing. It's speculated. Only buy mining stocks with the money you can afford to lose. You're speculating. It's like gambling. Speculating and gambling is the same thing. So you're gambling. You're betting. You're betting on the silver price go higher. So if you buy these things, that's what you're doing. You're totally betting on that price going higher.
Yeah.
So I just want to preface it with that. I don't consider mining stocks investing. You could go down 25% in a single day in a stock, and most people can't handle that. So your portfolio, you're exposing yourself to extreme risk, extreme volatility. So I want to preface it with that. Okay, who's number 2? I have Aya all the way down number 8 on my ranking on my silver. And the reason why is because Bumadine won't get into production until 2030. So they have two. So Aya's in Morocco, which I think is fine. They're producing right now 5 million ounces at their Zgounder project, and they're generating free cash flow. It's $1 billion company and everything, and they're doing fine. Everything's fine. But the flagship is a project called Bumadine. Bumadine is going to be a monster project, very, very profitable, but it doesn't get into production until 2030. So we're not really going to get paid for that stock until construction begins, and probably late 28 is, I'm hoping. So it's not, it'll slowly trend up, but it won't perform as well as the other miners because we have to wait and wait and wait. It's kind of a longer term. It's almost like a development project, development stock, but Bumadine is absolutely a thing of beauty. I mean, it's a big property. For instance, it has 450 million ounces of silver equivalent at 400 grams. So it's huge and it's high grade. Plus, they just came out with a drill hole today, so it already has 450 million ounces, and they came out with a drill hole. It was the biggest one, 15 meters at 2,000 grams silver equivalent. Now, you never see a company mine a head grade of 10. Yeah. So 10 times 30 is 3,000, but I'm sure, 300. This is like a 30 ounce per ton, mine. They're not going to mine that, but it's uber profitable. Now we don't know. They're going to have to do some follow-up holes, but I've always known this, that Bumadine is going to get bigger and bigger and bigger. So it's 450 million. It's hard to predict how much bigger it's going to get, but it's going to get bigger. So this is a big mine. It's going to be worth a lot of money. But we got to wait for it.
Okay. The next one is Guanajuato Silver.
Yeah. So Guanajuato, they just did a deal, Baldonitos, this week, and I just absolutely loved it. So they did a financing about a month ago, and a lot of people sold the stock and got out. People were really upset because they did a financing, and everybody thought, they didn't need to raise that much money. And it was like the third financing they've done in the last 18 months. And people got really angry, and a lot of people sold. And I said, no. You don't sell a 10-bagger. It's like, even with this dilution, this company has a ton of leverage to the silver price. You can still put up a dilution. You don't sell until they dilute you into the ground. And that dilution did not dilute us into the ground. There was still a ton of upside still left. And so people made a mistake and sold. Now, this acquisition that they made was a game changer. So they're currently at 3.8 million ounces. And this company, this Baldonitos mine, mined 2.5 million in 24. So it's in care and maintenance 6 years, but in 24, it mined 2.5. So if you add 2.5 to that, it gets you to 6.3. Now, I'm valuing them at 6. So every 500, so they added like 40%. to the production. And they only paid $50 million, which is absolute steal.
The discussion turns toward the true nature of mining equities, an arena driven not by steady fundamentals but by speculation, volatility, and the simple expectation of higher metal prices. As emphasized, these are not conventional blue-chip companies. They behave more like leveraged bets, capable of rising dramatically, but also falling 20 to 25% in a single trading session. Within that framework, the current opportunities in silver miners stand out. Projects such as Bumadine, with more than 450 million ounces of high-grade silver equivalent and record drill intercepts, represent enormous future value even if production begins closer to 2030. Others, like Guanajuato Silver, are gaining immediate scale through strategic acquisitions that lift production potential at a fraction of intrinsic value. For speculators who understand the risks and the upside tied to $100 to $150 silver, if this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next.